Hello, everyone. Welcome to Real Talk. If you haven't listened to Real Talk before, Real Talk is the only Real Talk podcast in the trading industry, and we focus on no bullshit, pure real talk, no fluff, no wishy washy, just serious, unscripted, unedited podcast. And if you don't like real talk and you can't handle it, this isn't the podcast for you. If you do want to learn about the harsh realities and the half truths of the market, this is the podcast for you. So, this is another segment of episode 3, and today I want to talk about something very interesting. So, I want to go back to 2002, right? And in 2002, there was a lot of scandals to do with the financial markets. So, one of them was a scandal called Enron, and another one was called WorldCom. And these were major corporate accounting scandals, right? So, because of this, there was a law enacted as a reaction to these scandals, and this law was called the Sarbanes-Oxley Act of 2002, and it's a federal act that was put in place in the United States. Now, the sections of this bill covered responsibilities of public corporation of boards of directors, and it added criminal penalties for certain misconduct. And it also required the SEC to create regulations to define how public corporations are to comply with these laws. So basically, this act brought kind of audits with it, disclosure controls, assessment of internal protocols, and just it's kind of it was a bit like a kind of, when companies kind of get accredited and audited, it's that kind of thing. So this was put into place to give the public, after those scandals, more confidence in the markets, and it was a kind of thing to show the world that, okay, listen, we have reacted to these scandals, we've put in procedures and protocols and policies in place that then protect anything like this happening again. But oh boy, was they wrong. So, as you know, as we discussed before in the podcast, everything's rigged. It's all crazy, and people that don't believe that still, I don't get. I don't get why you wouldn't believe the market's rigged. It's obviously rigged. Over this podcast, I'm going to be talking about a lot of things. The flash crash is one of them that I want to talk about here. That was complete bullshit and fake, designed to create a sense of control within the retail industry, because the day after they did a pump of Ripple by the banks, and millions of people were pumping it, right? I was in loads of groups. I remember seeing them. There were thousands and thousands of people in each group. And what happened when it came down to this big Ripple pump that everybody knew about? Price went 2 ticks up and crashed. Why? Somebody just dumped loads of their, cheap Ripple coins, you know what I mean, at a good price without driving the price too much. So typical pump and dump things, Of course, these banks are up to this, fake articles, fake this, fake that, to create a sense of fear or urgency or panic and FOMO. It's obvious that they're doing that. Why wouldn't they? Look at the GameStop thing. You'd think GameStop was real. You'd think people can move the markets. You know what I mean? It was all a facade. It was all a thing to make, to give the power back to the people, to think, yeah, we've got this. We can, we can stick it to the man. No, you can't. You can't. Yeah. Some people might have stuck it to the man for that, but trust me, they let that happen. You know what I mean? They let it happen. They lost a lot of money, and then they got their own back. You know what I mean? One way or another, and it gave these retail traders the sense that they can control the markets, and they haven't done since. And the banks and financial institutions will never let that happen again. Let me tell you that. Look what Robinhood did, just seized their trading liquidity. Like, it's crazy. So anyway, back to topic. So because of this act, there was obviously companies rushing around to try and get a business out of this act, because obviously there's a lot of auditors that come through, there's a lot of accreditations that come through, there's a lot of disclosure records and all that kind of thing. So there was loads of companies that propped up to try and jump on this. It's the same thing as, like, let's say you work for Tesco's, and Tesco's the UK brings a law out that all, I don't know, onions need to be tested. So, that'll bring a lot of jobs, a lot of businesses, people will become onion testers, and it's that kind of thing. It drove a lot of businesses to work around these acts and laws and stuff, and create businesses and be auditors and be recorders and reporters and all that stuff. So anyway, there was a company that designed a software that would record every correspondence between different companies, and then it record it and it will place it into kind of like an encrypted file thing, secure, so then an auditor could come along and read it and check all the records. But what actually happened was, and one of the designers and salespersons of this software was actually seen in an interview saying, yeah, the software does this. It actually gives the companies a backdoor to be able to permanently delete this correspondence and the record of these transactions and things ever existing. So instead of serving its purpose, it actually had a backdoor and allowed companies to hide things. So what do you think happened? So what actually happened was the software one of the software developers went to a meeting with a company called the Financial Industry Authority, something like that, and so he was explaining it, and he was like, "Oh well, actually, the software is meant to take the information and these records, and once they've been processed, and place them into a type of processing storage that allows." That's very secure and allows to only for the storage to kind of be viewed, you know what I mean, not edited, not changed or anything. It's locked, it's stored. But what actually happened was, instead of it going into that storage, you could send it out a back door and permanently delete it. So the purpose that it was there for didn't kind of existed. But the way that this backdoor worked was the way that this backdoor worked was a very kind of sly way, because nobody could actually tell it was ever there. It was permanently gone. So whoever was operating this software could kind of, run records through it, run transactions and stuff, and delete the record, and nobody else around them would even know. You know what I mean? So it's kind of could be one person, manipulating this in a company and stuff like that. It's a thing where it doesn't require a lot of people to be the perpetrator to, misuse this software. Well, I guess not misuse because it was designed like that, but you know what I mean. So how it actually worked with that storage system is that when it transferred over to that storage system, it it didn't have no record of it being on the first kind of the first phase of the system. So when it went over to that system, because it was a kind of the record's locked and it's kind of like a view only kind of thing, you could delete it and there'd be no record of it being in the phase one storage. So nobody would ever know it's there. So what do you think, before I continue, what do you think happened at this meeting, and what do you think companies done with that power of that software? They obviously used it to hide records and delete records. So the developer that was at the meeting, it was actually somebody that was testing the software told him that, and he was like, "We don't want this software. You need to do something about this software. The software doesn't serve its purpose. We don't want anything to do with this fucking software. Get it out of my face," kind of thing. So the guy's gone back to his boss and told his boss and the other people at the software company about the issue to do with the software. And then the managers and the director of the company told that developer salesperson guy, said, "Don't fucking talk about it, right? Keep your mouth fucking shut." You know what I mean? You didn't see it, right? Shut your mouth, kind of thing. So yeah, the guy was like, "What the fuck do I say today? What do I do?" So the guy was very concerned that this software was going to be used for nefarious purposes. So what he actually did, he went to the the SEC. What is that? Security Exchange Commission, and said, "Listen, the company that I work for has got this software. Some companies might be using it, and it's got this backdoor thing, and yeah, it's really bad. I'm very worried that there's going to be massive financial misconduct used with this. The implications are going to be huge. I'm very worried." The SEC went, "Yep, yes, okay, mate. Yep, no problem. Yep." Shook his hand and says, "We'll deal with it." And what happened? I'll let you guess what happened. The SEC went out and fucking brought the software. They went and brought the software. You can't make this shit up, ladies and gentlemen. They went out to buy the freaking software. So what did the guy do? So the guy went, "Fuck you, I'm taking you to court," and he represented himself. And what happened in court was it went on for about 4 years, and the guy, the guy pretty much had like an upper hand in the court, and the court actually recognized that these issues happen, right? And he was in court saying, there's loads of companies using this software. There's probably loads of misconduct going on. The SEC was complacent in what's happened, and They actually said to him, they said, "Yep, we, we kind of we recognize that these situations have happened, but they terminate I can't think of the word now. They terminated the court. It trial was over, right, and it was actually over on a technicality because what happened was outside the limitations. Now, hang on a minute, right, and that's the statute limitation. Sorry, now, hang on a minute. You just brought out an act, a federal act, the reason why the software was developed to stop that from happening. Yet this sham court got dismissed. You cannot make this shit up. Now, why do not many people know about this? Right, that in itself should tell you the fucking market is rigged. Why is the SEC buying that fucking software? Why would they? Why would they complacent? Why would they be complacent in so many companies using it? There's only one reason: to delete records. Why? Because the fucking market's rigged. The market's not there for this capitalistic free market American dream. It's not. It's there for this shit version of capitalism we've been given. That's not true capitalism, right? Where it's just manipulating it. It's just the big boys moving the money around and the central bank fucking everything. You look online, it's not a secret. There's always big companies saying the central bank are causing too much inflation and deflation within the markets because of the sheer volume that they have. Absolutely crazy, isn't it? Absolutely crazy. So that is the end of this episode. That's just a quick little scandal that I thought I'd bring to your ears. Now, I'm going to be diving in many more of these scandals. So if you did like this episode, share it around. The reason why I'm doing this podcast is to make an impact in people's trading and try and change people's minds and how they trade and what they study. And I'm not sitting here saying I'm some kind of expert because I'm not. I'm far from it. I am a profitable trader, but I'm not an expert. And I've recently joined a new community as well, where we're going to be learning a bit more kind of, following the smart money kind of methods, but without getting trapped like all the other smart money traders do. So, yeah, I'm looking forward to the future. Everything's looking sweet, and like I said, learning these concepts and going into this style of trading is the way forward. And I just really hope people listen to this and think, you know what, I'm going to message Dex. If you want to message me, feel free. I'll point you in the right direction of people that I've learned from and books that I've read if you want to know. But I just hope these podcasts get people thinking and start, moving away from the kind of standard common methods because they obviously don't work. Trading's very different to what you'd think it is. In life, you follow people, don't you? In anything else that you do, you want to be a good basketballer, you'd follow the best. You want to be a good boxer, you go and watch Tyson Fury, Anthony Joshua. You watch them and you learn from them. But in trading, it's a bit different. You don't want to follow everybody. You don't want to follow the guy that's acting the best. You really want to follow like the underground stuff. You want to learn how the actual money's being made because trust me, traders that actually make money don't shout about it. They don't need to. They have no want for that kind of ego. And I believe to be a trader, you have to be a certain type of person. To be an actual proper trader, you got to have discipline. You got to have respect for yourself and respect for the markets and an understanding. And you know what? People need to stop kind of shitting on retail as well because I was talking to some guys about this the other day. There are people in the retail industry still making money. You know what I mean? Their risk to reward is rubbish, but you can't bash them that much because there are people making money from it, but it's a harder game. Let's keep things simple. Let's just keep things nice. There's no need to learn all this mad risk management stuff. And, like I said before, if your strategy requires that much risk management, then it's like overkill. Your strategy's wrong. You need to be able to, be relaxed while you're trading.